Okay, cool. Well, so I kind of want to kick this off, just do like kind of a higher time frame kind of outlook and make sure everyone's on the same page as far as what the expectation is going into, uh, I guess, the next phase of this kind of structure, essentially. Like, we're entering a point now of extreme low volume. And for the people who have been around since that time, and what I've done here is I've clipped out some what do you call it, some major fibs, like, the uber fib polls and stuff like that, to find some major ranges that we're looking at for testing and for structure and whatnot, even on the weekly time frame. So the big thing to remember here is like this here is like, if this is a deviation where we were above previous structure, we're now deviating back underneath it and back into the low range, like the sub 30K range, which is essentially where we've been for a while. Now there is still potential to regain 31K, essentially still gaining above, going back to the upside. We've got a lot of major structure there. Even at the highs where we failed at, it's like, people, I can't believe we failed there. It's like, why can't you believe that? That's exactly where we should have failed, to go lower, which is fine. Everybody gets focused, even I do, on the low time frame ranges, the 4 hours, the daily. It's the high time frame that matters. And essentially, is you gain that, where do you go? Well, there's nothing left to do if you gain that, except for go to like 36 and then potentially all the way up to 46. You'll stop and move sideways along the way, but there's a lot to do there. Behind the scenes, also, one of the things I wanted to do, especially using like the BLX, looking at, not the BLX, what was it? The index. So even using like the index in the higher time frame, the big thing here, if I look at fibs, like these are reverse fibs from the high and from the low. So these are like the uber fibs that we look at. We're looking at price projection based off of Fibonacci sequencing. Where are we failing at? The major fib levels, right? Can we go lower? Absolutely. We can go all the way down to like some really stupid stuff. I doubt we can see that again. All right. But realistically, you're probably targeting back to the lows at some point eventually. At the end of the day, you haven't lost that much. You're only still here at 31.8. But if we go back in time a little bit and use, for example, our high time frame levels, right? Looking at yearly opens, highest time frame. What we're actually doing here too is that we're actually gaining back the 2021 year. And this is essentially a bull run zone, essentially, right? This is anything above 2021. That was the retests that took us back up higher to make all-time highs. We're still above that. So if we kind of like think of the two ways where we are, we're basically at the major changing point in the structure. If we break now and we go down to like 28K, we're essentially losing massive high time frame levels like the yearly open, like breaking down into the structure of the previous ranges and whatnot. That could signify essentially this entire thing being like a weekly deviation. Since we're bullshit backtesting it, again, we're still above it. So it looks like we can continue, but we don't want to close any weeklies out below it. And then higher time frame as well. Realistically, I still think something like this is still possible. Coming back down to essentially test the inflection point at 13.8. I don't think that's impossible at all. 7K is not going to happen unless you have a smaller exchange with liquidations. If we start flushing, you'll get a couple, like Binance US is getting punished with some really bad liquidity. But overall, again, yearly opens, we're talking the macro outlook of the overall structure. So with that, also looking at the major levels, right? So the overall phases of what we've done in these zones. And going back, let's just do the last couple bull cycles, last three, because that's all that really matters. Before that, it was very different structure. And even now, it's way different from what we did back in 2017. So, we've had price movements back up to the upside before the happenings that essentially tested major levels, 2014 yearly open, right? So it's not unreasonable to think we did the same thing in 2018 when we had the retest back in 2019, the rejection of that level. And it's not unreasonable to think a rejection at 46K at the 2022 level wouldn't happen. Now, the difference there really being is that the yearly opens, the timing of the actual all-time highs are very different comparatively. So, if you're looking at all-time highs like this, where we did it all the way into the end of 2017, and here we did it like in November, but realistically it was also blowing off. We're seeing that kind of cycle change, right? November, December, and then October, November, and then by the time December runs around, it was a little bit early. It flushed out. So where are we now in the overall cycle? Well, we're probably somewhere in here if you're looking at from a time phase perspective, because usually the last 3 cycles, it's been 500 plus days, something from 518 to 500 and whatever we're going to do now, days from the lows, that we're still looking at a potential change. Now, with that, back in the previous cycles, we've made new lows. Like in 2015, we actually went lower slightly than what we did, I believe. Yeah, we went lower back in August of 2015 than we did in the beginning of the year back in 2015. So thinking that the low is 100% in, it's not, you can't ever think that, especially looking at the local structure. So where we are now, we've essentially done the big hookup from March, June 2019, same as what we did back in March, legged up into a high zone, didn't test anything very strong because the demand wasn't there to push us higher. But that move up got us back above like some range lows that we essentially had. We're back above some range lows that we had, right? So there's some correlation to say that we can have that continuation still. I don't think it's improbable. I just don't want to start losing the levels here. And this is why the higher time frame, this point is becoming more and more like the super important point of the overall structure. Because if we start losing these levels, we could go much lower, much deeper, like 23, like we talked about, a level at 23K, potentially lower than that. So we're at a really crunch level. And if we start failing that, and people will try to keep longing because, there's long still in play, and you've got, 8 months of liquidity from the lows being built up. That's certainly enough liquidity, even though it's lower, to be able to push it back to the downside. So any questions on that? I'll just open it up real quick. Any questions about like the high time frame stuff, why we're looking at this from like a phase cycle and whatnot? What's up? So yeah. Anyways, we'll go further from there. So that's the higher time frame kind of outlook as far as the phases. And then we'll start using some cool stuff to kind of give us some perspective. I'll turn off that. Just looking at like the Harmony oscillator, again, the back data, because it's so resource heavy to calculate. Realistically, we can only just follow some of the trend structure that goes through. And yeah, from the lows that we did back in 2019, we're back here essentially at some of these high structures, a little bit lower on strength and trend, which is why, again, we think we can go higher back up to, essentially back up to these levels, which would be equivalent of like 37K, 40K, something like that on a higher time frame. And I think that's still plausible. I don't think that's even slightly unreasonable. And only once we start losing essentially 25K and having bearish retests of that, something like what we did back in October 2019 at 9K, rejection to push us back down, essentially breaking structure down, making new lows. That would probably take us reasonably back to 20K or just sub that. So that's still a valid thing. I think it's still, realistic to look at it from that perspective. But some things I want to look at now, more on like a metrics perspective too, because the on-chain stuff is something we probably don't look at enough, and I'm guilty of that just as much as everybody else. So I'll just go ahead and reset it and get like the full structure of it. So essentially the on-chain metric, this is all we can do in this is essentially use the data that we're able to pull on-chain data from. So even from like the weekly time frame, you're getting almost too much in this area. But what we can do, and if I just take this and I move it, we don't need to, there we go. So looking at the structure here, looking at the daily time frame of parts where we've had extremely high buying, high interest, right, are usually extreme low points where you still have major moves up. Like even at this point here, and I'll switch over to my crosshair so we can see it a bit. When we had this flush out from May of last year, we still had that move up that essentially did, a 25% move, 27% move. Are we getting into those zones yet on a high time frame? Like, no, it's not that attractive. We're still potentially looking for a bigger flush out, something like where we're down here, essentially going to crab, maybe pop a little bit, and then still keep grinding down, which we could do for another month. But we want to get some of these levels to look nicer on a higher time frame. So very often, especially on high time frame, when you see the correlation between this stuff, from lows that you put in became like the absolute low, and then we just had the grind down gain that continued, right? seems a little unreasonable until you look at the high time frame, which is, hey, we haven't really lost the lows that we put in, and we're still looking good to continue. Here again, as long as we hold some of these lows at 25K, where we had pretty good interest overall in the structure, we still have a potential for continuation. And what this metric is doing, like the overall on-chain rating, is taking all of these things and we've like mathematically correlated a lot of it to look similar, to make sense, essentially, to correlate across as a general metric for on-chain health. And on-chain health still matters. Like not everything is going to be, specifically on-chain important. It'll probably be less so over time, but it's still a super valid thing to look at. Some things we also like to look at too is like open interest on a very high time frame. And you'll see these major inflection points where you have very, very high open interest, and then you get like the first little flush out, and open interest gets essentially nuked on. Looking at the local stuff as well, right? You have building open interest, even as we're grinding back down to 30K, right? And this is an important thing to remember, is like if we're getting open interest nukes when we go lower, what does that tell you generally about open interest on a higher time frame? Most people are trying to long. Most people are opening positions and going, increasing open interest. So if open interest is increasing, right, but price isn't gaining, you're essentially saying that like here, price is going down. You have a deviation between open interest and price, right? Because open interest is climbing as price is going down. Everyone's still trying to long. Even here, what's happening, even from like what we did on Saturday and over the weekend, people are trying to long, like even going to last week, to have that continuation. Look, we're making the higher low, but now people are getting pushed down. Open interest is collapsing again. Now it's not perfect, but most of the time when open interest gets low, like very, very low, that means that there's enough liquidity above us to start moving back to the upside. And very often, once we start getting these low points of open interest, you'll either have the low in or you'll have one last little push. And then this spot, like as an example, right? If we just look at this structure here, right? That was where we had the lowest open interest, essentially going back until March. Here, we had a low, but then the higher low and the level that was regained to go higher. So again, a lot of things are saying we have a lot more punishment on the way potentially. We can still have a bounce, but higher time frame, the trend's still down since we've broken structural levels. Some other ones I want to look at just to kind of go through. Social sentiment, I think it's kind of, I don't know, it's interesting. Overall, it's pretty similar to open interest to some degree, but like, again, when everyone's super bullish and getting like, overly frothy about about social sentiment, and this is actually us being able to pull data from things like Twitter and Telegram and stuff like that. We're getting like people are frothing at the mouth right now at levels where they really shouldn't be. And they're getting really depressed at levels that are, usually running flat before a bounce, right? Getting really depressed. Oh, we're going down. Like we're going to break down to new lows. Bang, big move up. Oh, we're going down to new lows. Bang, we have the major move up. People start frothing. Then we have the flush out. And now as we're coming down, people are still interested in it. So very often when you get these points where you're having like very high social open interest, you're also seeing that as a potential change in the overall structure, because the open interest, the social sentiment, all this stuff, like when we had the nuke down, right? We had the nuke out from the FTX collapse, super low social sentiment, incredibly low. And then what happens? Well, then it starts building a bit. We look a little bit better. And then finally, people are starting to get a little bit frothy. We go a bit sideways. People get uninterested. Oh, it's a fake bounce. It's a fake pump. Social sentiment essentially counter trading some of these things. We're basically saying, oh, if we're super, super positive in the market, if the general public is, what do we know about that? Well, we know that 80% of the market loses money. The vast majority of people lose money, and they're wrong consistently. And that's the way the market works. It has to. So some of these things also, we've got some of these as like the individual ones that are like less accurate that we've put out for free just so people have some access to some cool things. But other things too, like minor confidence started dropping for the first time really heavily up in this zone, even in the upside run, which kind of is very indicative of like the overall structure. Like even here, miners were still kind of like, hey, we're probably going to do pretty decent. And then finally we start flipping minor confidence. They've kind of given up. the massive swing fail from April of last year. Like, obviously, everybody's been around a while. We know like why we were shorting the shit out of 48 because of all of these different things and the exchanges were manipulating. But the more interesting ones are probably, I'll look at on-chain volume just because it's an interesting one. Again, on-chain volume dropping substantially back to levels that we haven't seen since when, right? When have we seen on-chain volume this low? Like, it's at the low points of what we were seeing in like the dead market back at like 2018, or like even here, after we've made new highs, on chains going down, right? You've had maybe little spikes and stuff, but nothing super significant. So we're essentially somewhere in here. We're somewhere in this kind of bear market structure. We're in this transition between the next halving. And then what happens? Like, you have one bigger move, on chain starts flying, and on chain volume starts pumping like crazy. That should be the first sign that, hey, on chain people are accumulating. And that's going to be a bigger trend change for like the bull run, to where like, okay, well, the bear market's essentially, we've had the peaks of volume on chain of people basically selling, right? And then now we're going back down to a very low on chain volume. So the other one too, holders in profit. This is probably one of the better higher time frame ones because it tells you the general gist of people who are in profit in the overall market. So when you had points back in time, I mean, again, like 2017, it's so cheap, people, you could just buy it for nothing, essentially. Like a Bitcoin for like, sub a K was free money long term. And then you get to points like low points where everyone's lost everything, right? So the holders that are in profit are essentially plummeting down to levels that we haven't seen since like 23% of all holders are losing. Now, I think that it's a little bit too much here. I think that the fact that we're still at pretty decent profit overall, this is pretty indicative of, the same levels we were at back in, the 2019 phase, right? Very similar structure, just a little bit more pronounced and sideways. And the market's going to change. Like, the market's already changed. The market cap's so more significant than it was 5-6 years ago. So that can still drop. That can still drop to something really stupid. Probably not something like 5K. It's like, that's not really reasonable. But coming back to something like 12 or 13 isn't unreasonable, because essentially people need to be exited from the market and give up their coins cheap. And then long short ratio crossover. I think this one's a kind of an interesting one, mostly because when you see major changes in the overall structure, it says like, what do we really need to go higher? Well, you need long shorts to essentially come all the way down for people to start saying, well, now I'm kind of interested in maybe a higher time frame gains to go higher. Like, where do people really capitulate and give up? Like, they give up at these zones that are lows and they go fully short. That's essentially when you see, and this is a good also representation of what do most people do. Why does long short ratio mostly stay very, very high? Well, it's because most people long. That's the reality of it. That's why the moves down are so much more painful, because most people only take longs. Again, most people only taking longs, right? We're starting to get down with some people trying to short and break stuff to the downside. We're seeing some more upside here to maybe continue. But I'm really interested once we have breaks that take us back to like the 0 point on the long short ratio. Again, more pain is probably better long term anyways, especially given of what we've done in previous structure, right? If we're thinking that we're somewhere around here and we're having a little bit of a dip, we still want essentially that breakdown more so to essentially have a bigger move down, right? The COVID dump, everything's going off a cliff, zero, blah, blah. And then finally, everyone, once we get up back to new highs, this is where you see the total failure of the market, because they've been so brutalized for, a 2-year period almost, right? In kind of crabby sideways that a lot of people got hurt in. You see people trying to everything going short. Oh, I'm just, this is a fake rally. It's fake. It's going back to 5K. And then all of a sudden you're making new massive gains. You're close to the all-time high. And then the bull market comes in. And then you get your first major retracement down. So a lot of these things can be used together individually. But again, the higher time frame on these things is so important to remember. And you guys know my favorite. Retail stablecoin, man, like by far. This thing is super, super powerful. You can catch every single major move as it's happening. A lot of times it's a leading indicator, because you'll see, as prices breaking down, But or as people are getting super allocated, right? You're then seeing like, let me just flip it because it makes more sense if I invert the chart. And this is all real time too. Like these ones I can use low time frame because we're seeing the actual switch between people transacting on chain to Tether out of high risk stuff essentially. So when you're seeing these points and just like all of a sudden you get deviating, bearishly deviating, what is it, stablecoin demand, where people are so fully allocated and they keep trying to get more allocated, then you get your first major flush out, and then people get a little bit more like, okay, it's a bit neutral coming back up. Oh, and then we get the next flush out. Now the daily for this is even a little bit too high. I'm just looking at the weekly. Yeah, it's okay, but I really like this thing on the lower time frames, like 4 hour and below, because it really shows you like, okay, we have a high, we get some deviation, and now we're looking at some potential failures. Like, so even here, we're getting down to points where we could probably expect some type of bounce. But if we're looking at this structure and then we're looking at what we did before, like in this 2 month previous session, like what did we really get? Kind of middling structure, something like that would be nice to get a little bit more of a deeper test lower. And before, people get a little bit more allocated and then flushed out. And then finally, when you get these high points, it's all bearishly deviating retail stablecoin demand, and they're very powerful. Let me just see if the divergences actually show on there too, which is cool. So yeah, a lot of the divergences look pretty decent, especially when you have like maxed out divergences, something that's going actually from the high or from the low. Like this is most of the reason why Will and I, when we talked about this back in June, saying, hey guys, this looks like the low that they're putting in. This had a lot to do with it because there was no one left to sell to. Everyone's capitulating. Most of the people trying to long are being flushed out, and they're flipping their bias, trying to short it to break down structure. So again, maxed out stuff on this is really cool. I put all the alerts in on the alert section where you can see stuff even at like the 15-minute, which is fun. And the 15 minutes legit, right? You get above 75 on the 15-minute, you get up here around 72, 75. You're looking for those failures. You get down below to like 20 or below that, you're looking for some general pumps, and you got some like, again, very small moves overall because you're at the 15-minute. But anytime you start breaking, the 75 zone or getting below the 25 zone, you're essentially looking for major levels. And when you do get flushed out, and this is why it's so important with what is it called? The risk reward on your trades. When you have these points, it didn't show it here, but massively deviating where price is breaking down, but retail stablecoin demand is diminishing. Essentially, you're still looking for the gain, the bounce that takes you back up to the structures and back up to the highs, right? So when you see those levels, I think they're important, and you can kind of correlate that on a higher time frame as well, which is fun. And then I think finally I want to look at the whale bubbles. This is a bit of one that some people have had some issues with because they didn't really understand what it means. Essentially, when you see big clusters of these, and these are very, very large transactions on a higher time frame, they very often start essentially saying, well, people are taking profit or people are buying. And when you see this stuff on like high time frame, right, stuff breaking above 31, people are taking profit. They're sporadically taking profit up in these zones. You don't see some heavy accumulations, right? When you have like overlapping bubbles. Now you can adjust them down, but very often, like when you see the bubbles here, you see some type of accumulation, flush out, you see some type of accumulation. And then once you start capitulating, like, again, this is why whales have the no. Before we even made the move down, people are massively starting to sell off. You get clusters, and then we have a flush out to like the overall low, and we see mass buying, right? Mass buying, essentially. So it's a pretty interesting tool. Overall, my favorites are still looking at retail stablecoin demand, and then the overall rating on a higher time frame. And very often, when you get high points in this, you're starting to look at very interesting structure for going much higher to the upside. We're starting to see some on-chain ratings come up, but generally speaking, it looks a little bit kind of nasty. And usually, when you have the high retail stablecoin, these are mostly indicators to start accumulating or buying spot versus trying to take long positions based off of the overall rating. If you're trying to use that, I would argue that your best bet is to use the retail stablecoin demand overall. But it's a pretty cool tool. I love it. It's by far my favorite thing. Any questions? I know there was a lot. Just want to run through that just to explain the higher time frame structure of it all. And the way I have it set up on mine, I usually have that with the harmony oscillator overlapping, and I just merge everything onto the right. And then I essentially take the where is it? The retail stablecoin demand. I invert it, and then I show divergences on it. So I want it to follow a similar track to the harmony oscillator. Giving me a couple points because now I'm seeing retail stablecoin demand. I'm seeing the oscillator kind of top out. Retail stablecoin demand's dropping. Trend is changing to the downside. That type of stuff. Even some smaller bullish divergences on stablecoin demand. It's interesting, but it's not like the end all be all, so to speak. At the end of the day, with that, you could probably leave that off. It's not super important on the 4 hour, but bullish divergences 4 hour plus on the oscillator are good too. That's a big turnaround for me that I use is like, okay, stuff's happening, stuff's changing. So questions on that? I know it was a lot. I went through it pretty quickly, but some really cool stuff to use with it. And then something I wanted to show, just kind of double tap on, which was the flow index. And I think it was Lauren who showed me this with the style, where you could take, like, I mostly just look at the big ones like large caps, altcoins, shitcoins, stable coins, but you could change it to set to line instead of a step line. And the reason for that is step line, it'll show you a bit more of like stuff happening. If you're using just the regular step line, which is perfectly valid, it'll just not show you the changes quick enough in my mind, or it doesn't show as like a congruent change. It might be a little bit ambiguous, I think. So, but overall, what do we see? Stablecoin still in command. The correlation to the market, it should definitely be, stablecoins are the inverse of the market essentially, and large caps are still going down. Altcoins and shitcoins, there might be some more correlation to move into that if we see some gains higher, but that's overall what that is. And then funding rates, I'm not using that so much right now, just because funding's been overwhelmingly bearish for a long time. But yeah, combined with those things, I think one of the biggest ones that has been helping me too, because I've been bored with trading Bitcoin and just doing some alt plays. I've also been trading some gold, just on some high frequency or lower time frame. But yeah, there's some pretty cool stuff you can get with like the MDVD, the multidimensional volume delta, because when you see these massive points where you have, even from the 4 hour, but even lower time frames, where you see things that are in position and out of position, it can very easily telegraph market movements, right? Majority of the volume is below structure, like what we did on Monday, to go higher. No clear indication on the 4 hour there, but even here, right? All you really need to do is get above some of the structure. This is like the in this range that we're in going back. This is the high frequency area. This is the most volume in the whole thing. I mean, we're fighting for it right now, potentially losing it. So I kind of use these things as parts of levels. So really what I want to see is I want to see a gain to go higher if we have the gain. And then this 4 hour close is going to be important, because if we get above the level, if we get back above the stuff, now we've got, similar to what we did on Monday, early hours, that we're seeing, volume in position potentially go higher. And that's going to be a big change on lower time frames mostly, but it's definitely something that's valid. So anything with that? Any questions? Nothing. It's all good. All cool. All Gucci. But yeah, and the nice thing is, it's like with this stuff, we're still going to the downside. The trend's still down. It's been breaking down for a while. If we're going to see some type of bounce, like I really like the bands, 4 hour and stuff. They've been really, really clean as far as like seeing important levels, almost boxes of liquidity. But let me actually no. Let me go into back to my levels here. So yeah, generally speaking, that's still the plan. That's still the eventuality, is that we're holding some stuff. If we break down into some levels, we don't want to get anything really deep below us. But and if I just simplify this, it's a lot of data there, right? Where is there some liquidity, right? Right here at that 29, 28, 9 level. if we're going to grab some stuff before we pop off. We're starting to get some bigger stuff down here at 28.62, lower time frame. But the liquidity above us is starting to get really thick. And I think that's going to be one of the biggest indications of like where we may go. Because we're really close to the low leverage stuff from the previous range. And generally speaking, if we look at like what we did previously, we had to break down into that really low leverage liquidity to then, grind down to build up enough liquidity to the upside of shorts essentially breaking down. So all we got to do is really gain something here. And then now what are we doing? We're targeting stuff at like 28.6. Or excuse me, where am I at? Yeah, 29.6. There we go. So 29.6, you got some really high leverage longs and stuff. And even above that, up to like 30K for another test. You got enough liquidity there to take it. And what do we have to do essentially? Well, we went here, we gained the local stuff, started gaining some levels, on last Tuesday. And then we had a bigger, deeper move up into some bigger liquidity. And we can go straight to this level. We can go straight to this liquidity and then still reject it. It just depends if we actually have the ability to gain above it. And now we've opened up all of this big stuff above us potentially. So the liquidations is still arguably one of my favorites just because even low time frames, you're seeing those reversals, especially when you have high leverage stuff that's stacked. It's like that's why 28.9 is going to be an important level for me. If we get a flush down to it. Right now, we're just a little bit middling, a little bit boring. And then obviously down here at like 28.6. Which I probably need to box that off. I think this is still my overall plan in this zone. Just based off the liquidity. Right? Still looking at that potential reversal if we get down to the deeper stuff, but that could take us much further down than people think. Until then, all we've been doing is we've taken the short liquidity, we move back down. We pop some of the high leverage short liquidity, move back down, and so we're above the pocket there. I'd rather deeper move into that, down to maybe even 28.6 before we see a bounce. Otherwise, it's just the local stuff that matters. But I am really happy to hear that some of you guys like again Slick, really great job with those short trades and the breakdown of structure. I mean, that's the cleanest stuff that you're looking for. You're looking for those failures to go lower, and that's essentially the only way to play it in these zones, right? If you play the levels, they'll be your friend, right? We've lost stuff, we made new lows, we gained stuff to go back to test highs. Because that's the end all of like what we're doing. Like, yeah, we can look at liquidations, we can look at the overall trend, we can look at all these things, and the trend is down from the highs we made last Tuesday, Wednesday, right? We've broken levels and lost stuff to go to the downside. We're still technically moving up from what we did back at the beginning of August, but it just doesn't look clean. If you want that continuation, which we all do, what do you want to see? You want to see that gain to go higher. Until then, your priority is still looking low, looking down, and everyone's still trying to long because like we saw when we looked at the long short ratio, most people long most of the time. So the deeper liquidity that's been building for quite a while, it's been building since the beginning of the year. It's going to be accessed, sooner or later. It's just a matter of time. If that makes sense. And that's a whole thing of like why we look at some of these levels too. It's like the swings, right? The swings get tested. The swings create structure. The swings get failed. So when we're seeing those levels, like obviously the bigger swings are the bigger movements that matter. And that's why when we get those tests, like all the way down here into some deep liquidity, that's essentially what we look to gain to go back. And that's an important part of it. If you're looking lower time frame, like I would very much argue that to use the swings that might be wicks instead of just as it plans it on the bodies. It's still valid. It's just I like the wicks more on the lower time frames because that's like the maximum that it goes to, which is cool. And you can crank the sensitivity up on on the lower time frames too, because you get a lot more data. And then you're seeing like big boy levels where you see retests, like that on like the 15-minute. It's like there's your sign. Yeah, I think that's about it. You guys got anything for me? Any questions? General questions? It can be about anything, market stuff. If you guys want to see tickers or something, I got a couple minutes. There's no rush. Yeah. So you can look at that overall between the different like funding rates. So generally speaking, if you're looking at funding, you're seeing if futures are higher than spot. That's generally what you see when you look at funding rates. You're seeing essentially where's the allocation, like why is one thing being promoted over the other. I've changed my funding rates a little bit. I've turned off OKX and FEMX just because they were kind of messing some stuff up for me. But generally speaking, yeah, we're tweaking a couple things with it right now, just because if I have it set on normal, it's a bit it's a bit kind of funky that everything's only up all the time, and the funding itself has been significantly diminished from what it did way back when. Like funding rates have fundamentally changed from what we were doing, previously, right? Where funding was controlling the entire market. So we're working on a couple solutions for that right now to potentially change it a little bit, just because we want. Well, I mean, like funding rates are not specific to Bitcoin or to individual cryptos. There's no, yeah. So what we like, that's something we're looking into right now, and we're trying to see how we can do that with pairs. The problem is that most crypto pairs, you'd have to be doing it on like an exchange basis. So like if we were doing funding rates, we'd have to pull that data from specific what do you call it, from specific exchanges. Here we're just pulling Bitcoin and ETH from like 6 different exchanges, like that funding data. If we did it per coin, we'd have to find each individual coin's data input. So we've thought about that potentially. You'd have to build a library on. You can build a library now and then access that, but it's not something we're like hardcore looking at the moment. If I'm going to be honest, what you can do is if like let's say you have like what's spot, what's the highest rune traded for spot right now? It's probably Binance. And then we look at perp. So what you can do as an example, it's just an easy solution for now. If I just turn that off, go to full screen, and then I add as a comparison, compare add symbol, and then I add rune USDT.p, right? And I'm looking at the perpetuals. You're not going to see a whole lot of change on the higher time frames, like an hour. But if you do something on like the lower time frames, you might actually see the changes. So you're seeing that it's like again, the spot price is higher, like percentage wise, than the other price generally. Yeah, yeah, I agree. And then I mean, then you have points of reversal where you know it switches. Well, did we get the switch? Yeah, we got the switch. Really was here on Tuesday, where you see a lot more spot driven stuff being higher than the perpetuals by you know again, take the percentage with a grain of salt. You're just looking for general movement. And now when you're looking at it in this direction, it's not super helpful. And I don't even think you can change that. Yeah, there you go. If you have it set on regular, so off a percentage, off regular, you're now seeing like the different prices of perpetual versus spot. So you're seeing when stuff is being spot driven or stuff is being futures driven. And generally, like right now, like there was a lot more, uh, you know, it being lower than the spot price, which is what we're on now. We're on just normal rune. That spot prices were doing better, and even there, like you see a disparity in like the overall structure of it, which is weird. But Yeah. Yeah. This is why I look at what do you call it? I look at spot first before I look at the perpetual. This is why all my list is like of spot price before I look at the perpetual price. Is there a way that I can see this as like mm, yeah, I mean that's something that like I said that we're interested in. It's just it's depending on whether or not we have the time to do it right now with everything. Because I would like to see that as well, because then you can see the disparity in real time of like if something's being spot led up and perpetual price is below spot price and you have a higher allocation, if price is trending to the upside and spot is leading, what do you call it, futures, then it looks pretty much better overall, right? Yeah, no, I agree. It'd be interesting to go into and try to research some more. Yeah, because right now Rune looks pretty ass, if I'm being honest. No, I mean like yeah, I mean it's still even holding the local structure. It just looks really rough compared to everything. Like the whole market looks a little bit rough, even if you're going to get a bounce. It could be. Like I said, it's still holding the gain. It's still holding the level. Like it gained above and bullishly back test like the stuff we did back on over the weekend. Essentially, bullishly back tested, make new highs. Trend is still up. The only difference now is that you've broken and made some new lows. The only way to invalidate the fact that you've now made a lower high and a lower low, which trend down, is essentially gain back the levels that you lost that led to the low. So gaining back above stuff somewhere probably around like that 1.51, I think that'd be an interesting one. Just because that would be, the gain back there means you're gaining back previous levels, which kind of invalidates the low that you put in currently. But then you're looking for that higher low. So until then, you're kind of trending to the downside, even lower time frame. Yeah, I mean it's starting to break structure. It made higher lows that were significant back on at like 2.32. Gain back June, like that was the first major gain back of something that it lost. So 2.325 was essentially the level. Yeah, let's look at the previous stuff here. Yeah, so it's made new lows, and then locally it's made some higher lows. You want to gain something back to go higher. And let me just change these back because I usually look higher time frame. I don't know what SNX is. Not sure. Mm, okay, so it's a liquidity it's derivatives liquidity pool providing of the backbone for derivatives trading in DeFi. Uh, it's a decentralized asset insurance protocol allows users to mint, hold, and trade a wide range of stocks. It also used for certain cryptocurrencies as well. So yeah, I think that's going to be doing pretty well, if I'm going to be honest. I think that's not unreasonable. Their overall trend's very, very strong. This looks like a macro accumulation as well. Like if I'm looking at like just this structure, that looks like higher time frame accumulation because you're making higher lows, right? You've put in the low, you've made higher lows. It's just not gain anything back. It needs to make a higher high somewhere, and like the macro stuff. Like it needs to gain. It needs to make a new high from where it failed at, essentially, to retest some of the structure higher. Because otherwise, it looks really rough. Um, yeah, they were too early. There was the thing with real world assets. Like it wasn't there. Like the demand wasn't there, or like synthetics. Like the synthetic exposure wasn't there. There's no demand for it. But anything that's RWA based, I think, is going to do very well. You know, anything that's because everything is going to go that direction, like without a doubt. It just has to. Like there's it's so much safer and quicker and easier to trade. Like if I go back to this, I just copy and pasted something. I take that and then I take all my little stuff here and I just make a box and then group everything and then save it and turn it off. You know, you're looking for that white coffee and kind of accumulation structure. You're still arcing down. Yeah. Something like this. Yeah. If I just but this thing's probably expanded like on a much higher time frame. Like it's never going to be perfect, but you start seeing like major changes in the structure. I still think that's in the downtrend phase. Like it's probably something like closer to that. So if it does make a new low, we want something to happen there. But again, like with the white coffee and events and phases, like that's never going to be perfect. Like it's theoretically correct, which it is, but at the same time, it's very rarely 100% correct in that sense. Like the only difference here is that you made if the SC here is what we did here. Why is that gray? There you go. So like if that's the SC there, and then that's the ST, that's the like we had to move up, right? That's the AR. Then we had the move down. That was the ST. And they moved, some type of move back up, and then made new lows. But I think if I'm looking at this correctly, like I would probably argue that this is still downtrending because you're making new initial lows, and you haven't made any significant like higher highs from levels yet, and that comes in here. Like where that stuff is starting to accumulate is the same reason why stuff is starting to distribute, right? And what's the change like when you're looking at accumulation, it's the same thing as looking at a distribution. You're making lower highs and lower lows in a macro time frame, and then even here you're making lower highs and lower lows. Like what's the first significant change? And it's essentially this, right? It's the fact that you make a low, then you make a higher high compared to like significant swings up. Did you do that? Like not really. Like overall, not really. I don't think. But that's just me. I just don't see it yet. And this is just like one of the white coffee and accumulation schematics. The other one has no what do you call it? Has no phase. So if I just do that thing, something like that, I think is a little bit more reasonable if you're trying to say that this is the sideways accumulation of it. I think that's way more likely to what it might be if that's going to be the low that put in. That looks a little bit more like something to be interesting in as far as like an accumulation, if that makes sense. So yeah, I can see that a bit more as like a change. But again, it's a bit too early, and some of these accumulation periods have to go on for a very, very long time. And I think we still have time. We just try looking at the weekly if it changes everything. Probably looks ass. Yeah, the weeklies are even a little bit easier to use. But again, it's not perfect. It's theoretical. We just need to break a high. Essentially, that's what we need to do. Like even on the weekly, we need to break a significant high. Like we need to make something that just goes pop, and then we can even come back down or even make new lows. But now, well, not make new lows. Excuse me. But you need to make a new high off of the previous structure, like what you did back in March on a lot of alts that haven't been able to essentially go back up. That's why they're still downtrending so much harder than say Bitcoin, which is technically uptrending, right? Very different across all the different altcoins. Again,
Can you have a look at Sol?
what's that?
It seems to be doing a higher low. Solana.
Solana?
Mm.
Yeah, Solana broke some structure, but Solana also had a significant black swan event. So I'd probably be more interested in like what it did back here. It's still making higher lows, like again, very very cleanly so as well. That's a lot, but yeah, higher time frame. You know, the hold it what it did at 15 or 14.9. You know, that's a significant structure change for sure. Just looking at like where it tested and what it gained, that's an easy gain to go to high. So it's still trending to the upside. I think Solana can go back to some other bigger levels. I think it's very possible. You know, Render also doing really good stuff. Very strong bullish back Tesla levels and things like that. Rune, not quite. All, yeah, I agree with that. Yeah, I agree. But again, where did they fail at? Did they fail at after making a new high off of a significant higher structure or not? I would say no. Um, Realistically, you want to see it probably come back to 1.18 on a high time frame. Oh yeah, I mean, I did the same thing with XTP. Like, I don't know if you guys remember talking about this a couple of months ago. Like, I literally bought zero point 0.05 or 0.005 like down here. Like, I bought that. No, I actually, yeah, I tried to buy this on the next day, but I ended up getting in at 0.005 because the slippage on this thing, because the size of my orders were like 18% or something stupid. But that was like the first significant like multi-month break in structure. No, I also got a bit of a tip, but I freaking sold this thing like at the failure. Like I was really this is the best one I've traded this year. It's like I sold it at the failure. I actually started chipping away. I didn't even sell the whole bag, and then until I finally like exited everything at sub 1015, I think, like completely. I bought a little bit back, but I'm just kind of holding on to that now. Like I bought back my original buy, but at a higher price just because it's holding structure. But I mean, I made all that I held on to and that I put in other stuff. It could do this thing could do also continuously well. Like I know some guys who got in on this from the ground floor. And again, this is why you look at the high time frame, like the monthly time frame with this. Like where did it fail? Like the initial listing, and this is the only thing you can really sell it on. I was buying on chain on Uniswap, but it's been listed for a very very long time. And it probably should still come back down to like 0.012 or something. But they're doing something similar, if I remember right. Tap, a friend of mine got in on this thing at ICO back in 2019. He got out entirely like at 20 cents. So I think they're doing, it's a UK based card to, oh gosh, what is it? Card to, kind of similar to crypto.com, but it's UK based. So it's changing kind of that narrative. We're trying to. Some of these things are just so. You can, I'm sure you can buy and sell on it. It's like what you can do with like crypto.com. These shorts worked out so nicely though. FET is another one just because it's an AI token. That's going to do well. You know what pisses me off too is that I actually got in on this thing at like 6 cents, and then I actually got out of it like before it hit like $1. Like way too early, I got out of it. That's most things. I mean, you're never going to time the top and bottom. It's very rare. Yeah, and you got things like XRP, which don't actually look terrible. Technically broken new highs. Well, cool. I think I'm gonna kind of call it a little bit. You got anything else you guys wanted to go through? Anything specifically, I guess? Just kind of a general run through of different stuff. And let me just look at gold, by the way, because like I said, I am trading that like just for shits and gigs. Yeah, that could continue if we have a flip here. It just looks a bit rough here on the higher time frame. But yeah, I'll call it there. We went through a couple different things that we can save it and upload it for stuff. But yeah, overall priority hasn't really changed. We're seeing some nice little bounces locally. I mean, but they're so minuscule. I would really want to see like one last little drive here, and then you hold the level and then go, or just drive back down because it's all flatlined on like the 4 hour too. It's coming down quite a bit. The 4 hour can come down a lot more because the trend's still down. It's just all it needs to do is gain and go higher. No, it doesn't have to. Like places where it had to go down was like here, like 30K. Like the initial rejection, the secondary rejection, it's like here's your sign, right? And everything was saying we're going down, maxed, and then even after we broke down, you had trend change on the 4 hour, which pushed you down. We're getting really bottom in this zone though to maybe do something like this. All we gotta do is start doing a little crab up. Because this looks really similar if I look at like all the different metrics to what we're doing like right here. If I just turn everything off and just look, in this structure, it looks really similar to like all we really need to do is make some higher lows and then we start crabbing back up and then just do a little tip top pop and then nuke it hard again and then grind down. And then all of a sudden the structure we're getting into is like super similar to what we did the last 2 months before the move up, back in this zone, essentially. But like the lows that you get to, even on the 4 hour. Like I always, when I take my bigger trades, I always wait for stuff to get super oversold on stuff like the 4 hour, or super overbought on like the 4 hour, and then you might get stopped out once or twice before you get a move down. It's just volume's low. It's the rough spot of like the bear market transition going into next year. This looks rough as shit. It looks really nasty. Yeah, because it's the deviation of it. It's price essentially going sideways where strength and trend are moving back down, essentially because you're losing levels. You make a high, and then you're making a lower high and then a lower low, and even after that, when you gain back stuff, this this kind of consolidation essentially didn't gain enough to go higher, and then by the time you did this little pop off, right, that deviated on a lot of different metrics, especially on like retail stablecoin demand, which all is bearishly deviating, right? That's the big thing that kind of sticks in my head, is like it's all bearishly deviating. Or excuse me, it was here, now it's natural. That's my fault. It was deviating here, right? Because price went higher, and now you're seeing the swing failure that went down, and now we're seeing some higher lows, like local. Selling, distribution. So yeah, it's mostly distributing still. It's a big change essentially from what we saw in here, where we distributed most of everything at like 29, 30K, and then it just kind of collapsed and crabbed and had some really nasty price action, like really nasty stuff. But there was also a lot more interest in this zone. Like there's a lot less interest in lower volume in this zone. You can just tell. Like, let me put a volume on. Like overall, the volume has died on spot. Let's look at the index. I think there's going to be a big disparity. Yeah, there is. Yeah, but even here, like a lot more volume in this zone generally. Like, so if I just put like a moving average to show it, like a volume moving average, like it's still going down. Like the volume here is lower on average than what we had back here. Just look at, yeah, it's pretty standard, but BitMEX is pretty good stuff. Yeah, and even on perp, it's been dying. It's been pretty nasty, pretty boring. My favorite perp chart, like for futures for Bitcoin, is still the BitMEX chart. I might actually move back to that a lot. Like I keep saying it, but I've reactivated my account there or KYC'd it. So I have one way, way, way back. That was a lot of fun. All right, but I think that's it. You got anything else? Call it high time frame analysis and like on chain metrics, and then yeah, that's pretty much it. And then you can, do that high time frame analysis, on chain metrics, and general discussion, I guess, because it was a nice little chat with you. Yeah. Because this is, I mean, like, I don't know. Like, for me, this is always like the point in, if you like, compared to what we did last cycle, like, this is the point where everyone is just like, it's over, it's dead, there's nothing happening. And like, you're in it. Like, and this is the biggest part. Like, this phase is 500 days long. Like, it's stupid. So we're getting to the low volume points. Like, if we go on like previous cycles where we had like low volume, like there were some days in here where price didn't move like $100, and it was so terrifying. Like, it was just so nasty. Like, you had stuff down in here where price is moving like $100 a day for like 2 weeks, and then it has like a sharp move, and then it doesn't move or just grinds a little bit, just losing $100 a day. And it's not uncommon at all. All we gotta do is survive this point, and then like keep our plans up as far as like what we want to do, because this is just low volume, less interesting testing. So that's what you're doing, is essentially looking at um, alts right now, or like for me, I'm trading some freaking gold. Yeah. Like, what about this? Is that a bull flag? Where's the bull flag? It's like, I got like the patterns, the patterns, man. I think it drives me crazy. But the pattern is going this, and then what about the trend line here? We got this trend line. What about this trend line? It's like, that means something, right? No, it's like, it's all nonsense. Oh, this one to there. That's stupid. That's so dumb. I mean, even this one I can kind of understand, but it doesn't really make sense when you like extend it back to like the previous structure. You can argue at something like that, but then it's like, where are you doing it? Are you doing it to the wicks? Are you doing it to the bodies? Is it coming down here? You know, something like that. Or what if we actually already broke it and like now it's over? That's the whole problem. It's like moving averages in general. It's like, it doesn't actually mean anything. It doesn't mean you've gained or lost a level. It doesn't mean you've bullishly or bearishly tested something. It means that like it's just doing something that you've created that means nothing in relation to the price action of the chart. You know, losing levels, bearishly backtesting levels, say it's basically saying there's not enough demand to go above this price because there's more sellers than there are buyers. There's more supply than the demand. There's more sellers than buyers at that price. So you get rejection at key levels, rejection at high time frame levels. Oh, we're bouncing on this, or we're gaining that. Like, we're bearishly testing the monthly open, which is a monthly SR. Like, that's a very high time frame level, to look at from like that perspective. And quarterlies are big deals. Even, I mean, like, one thing I haven't used enough of is like the previous dailies, like testing previous daily opens and ranges. You get quite a bit of tests, especially with the previous weeklies as well. Like, I don't use it enough, and I need to, because I usually turn it off for the streams and then I'll forget to turn it back on. But like, you'll get overlap of level that says, hey, if we reject that and lose it, we're gone. We might add it to where we have more, where you can select the number of days it goes back. But no, I mean, we have that. Then you just go down to ranges, and it'll plot ranges for the previous periods. Like, um, you know, yeah, you can do all the sessions, or you can do open and close the sessions. And you do it for both open and closes, and you can actually, like, it already technically is there. Like, if you just put that on, and then you put like the daily open closes, and now all of a sudden, hold on, let me Yeah, so open, fail, close, go lower. Yeah, exactly. And then you get like big levels like this. Like this has been a big level for months, like or for since the end of July, essentially. This weekly range structure here. I'll go higher time frame. Starting to fail and reject ranges, reject previous opens. Yeah, getting back above like some of this stuff is going to make all the difference. But you're essentially right now just back testing like the previous weekly open, which there's still liquidity down here to take the 29.6. But there's liquidity to take. Definitely liquidity to take. Yeah, I'm resting, I'm sure too. People trying to get in on the long. Like I would love to just nuke that straight to like 28 and get all this juicy stuff. Yeah. 28.5 is like I think they'll go to 28.6 first, and then you'll get a little bounce there if it goes down there, and then at 28k, I'd be skeptical to just go to 28k. I'd rather go deeper into it and then higher low it first, and like get something much more significant to that. So if I go to like the daily, it can only show liquidity on like a higher time frame, and like here you're getting at like the higher time frame liquidity that gave you the move up, like. So you're looking at a much higher time frame version of the liquidity now. So when you have these, all of the major shorts, essentially of people like leverage, it's all been taken out here, and now you've got like what do you have above you? Like you need to take this stuff out to go higher, or you need to start failing it back down to like down to this structure. So, and it's all based on look back. Like I think we're going to try and change maybe the look back option so we can change the number of bars because it's a bit more streamlined. It's just you want to have as much data as possible, and we can only look back a certain number of bars in a certain amount of days, even on like the 12 hour. Well, I mean, yeah, you. Oh, sorry, the mad baby, mad baby. But oh yeah, but I mean, like here, like what are we doing? We're doing liquidations going back, 6 weeks. That's what we kind of focus on, even on like the 12 hour. Um, so that's what we're looking at as far as like time frame back. But if we can change that look back period further, I think it's better. But if you're going to be using it in that sense, like the bands are still really really interesting because then what you're seeing essentially is when you have major drives, you look for failures, and then that pattern of okay, we're getting down in like these kind of like dull areas where okay, we're popping the lows and then we'll run the highs on like the low leverage, pop the lows, run the highs, and not really gaining anything back. It's like even here, we've kind of sideways out in this zone, which isn't like super attractive, but we're even less volatility than what we were doing back in May when we were like crabbing and doing nasty stuff. Like if we are going to flush out here, like I would much rather see like 28.5 all the way down to 27.2. Like 27.2 to me would be the better one because usually when you get hit 27.2, you're getting towards the end of like the major pockets of liquidity. And then even here, it's like, okay, we hit that, we hit more lows and the trajectory is definitely down. But, we're not gaining anything back yet. And that's the big thing. And the best example is what we did back here, right? It took us 2 months of building downside liquidity from like 31k almost, 31k down to 25k of just like nasty pop and drop down. And here you're actually doing it at a much smoother area. But there's a closer version of this. If you're looking at orders, if you're trying to get like on the liquidations on local stuff, we actually had to build that into the volume delta. Yeah, because we set that by orders by volume. So we can actually use that and then put the order book on. Which is pretty cool. Because then you can see like the order book by volume stuff that's coming in. Yeah, I mean, it's again, it's really resource heavy when you have the order book on because it's pulling all of this data. Like I'm pretty sure TradingView gets pissed at us because of like all the resource heavy data that we use. Like the problem is too is like if we use libraries, I think the only way to use a library is that you have to publicly host the data, and then people can kind of like extrapolate shit. So like here you go. You know, you're getting the big bounce. Where's the next little big block of orders coming in? I use it lower time frame. I'm scalping a lot more in this zone for sure. Yeah, exactly. Like because the moves are smaller, like I'm still only allocating like risking 1% of my account, but I'm increasing the leverage and my position sizing is like based off of that too. So like I keep my position sizing um, lower, but my leverage higher, so I can actually make money on the lower time frame moves. Which is why I always advocate like low leverage, high time frame for most people. Oh, there we go, broke it. But even here, like you know, you're losing levels, you're breaking stuff to the downside. Yeah, oh, that's right. All we need to do is get above like this stuff right here. Yeah, keep layering shorts underneath the August monthly open. Yeah, but if we can start higher, lowering it here from 29.1, it looks okay. Or even here if we start gaining above, because there's a bit more volume on this candle, like even lower time frame. So yeah, even low time frame here. You know, all we really got to do, even on like in like the current time frame, is just get above like that volume block. You know, and we're really close to it because then we can start accessing stuff to go higher, and then you get some volume in position, or like here we have stuff out of position. But like the higher the time frame now, like the more clean it is. And when you have stuff like this, where you have like bullish volume in position underneath the candle, it just looks so strong. No, TP targets don't change. Like I always plan my trade, like high to low time frame. Like my profit targets don't change. I plan my trade like my risk to reward level to my first profit target, and then I scale my profit targets based off of like as an example. Let's say I got long here. Like where's my first profit target? Right? It's not in the daily open because that's way too far away. It's probably back at like some more significant structure, like sideways. So if I turn that, just clip it off real quick. Actually, that's not. What am I doing? I'm gonna use a line. So if I get a long as an example, where's my first target? Come back and test floor structure here, right? So even if I can do it where I have a 4-to-1 risk reward or something, even if I get stopped out, then I can still re-enter. That's the whole point, and still make profit on the trade. because everyone has this idea that's like they want to win every trade. It's like, I don't give a shit if I win a trade. Like, I need to win not 0, but generally I win over half. But if with a risk reward of 4 to 5 to 1 on your trades, you can win like 30-40% and still be in profit and still make money pretty decently. And like, that's most people's problem, because they look at it from a sense of like, winning the trade and losing the trade, which, I'm guilty of using that verbiage, but essentially you're looking at your profit factor over time, which is how much money are you making versus how much you're having a drawdown. And that's the biggest problem, is like, did the trade go where I was planning to go? Yes, good. Trade complete. Move stop loss into profit. Let trade run to next profit target, right? So I take that first one. Let's say I just go take it to there. Bang, got 1. Stop loss then goes from there to just above my entry. Stop loss go to the next level, profit target 2. Stop loss gets moved up. Profit target 3. Stop loss gets moved up. That's essentially all it is. And now I'm over half out of the trade. So even if it continues, I'll make less. But my idea of trading, if I'm scalping, is that if I'm trading on a low time frame, like below 4 hour, below 1 hour, I'm not entering trades to let them ride to like 30K or whatever we may do. Like, I don't care. I'm trying to extract the most amount of profit off of what we're doing in the local time frame. And that's like most people's mentality switch that doesn't exist between swing trading and scalp trading. So like, when you're trading higher time frames, you're looking for the swings that are, high time frame swing fail patterns and stuff like that, where price fails to achieve new highs or new lows. You're using that to start building a position to go lower. Like, even if I'm being lazy about it and I've targeted something on a high time frame looking for reversal, I'll start, maybe chipping away at my entry as it's going against me, right? Price is going down, price is going down, price is going down. Okay, it's hitting an important level that I'm interested in. I'll maybe take 10% of my position and just market smash in with like a pretty loose stop loss, right? Still targeting above and like pretty loose stop loss. That works for me, but most people need some structure. So that's why I say the 4 to 1. So like, if you're going to get fully allocated into a trade from one position, it's the least efficient way to trade on high time frames, right? That works on scalping, but on high time frames, you need a layer. You need to like say, okay, price is coming down here. I'm interested in this reversal. I maybe take 25% of my position, bang. Maybe I'll even have one profit target or something like that, something small. And if it comes down to it again, I'll maybe add more as it goes lower and maybe add more until I'm fully allocated. And then I look at my profit targets to where I want to go to, make sure I can hit a 4 to 1 to one spot. And if it's too far away, or if I feel too allocated, I'll then just start removing some of my position. Like, chip in, like, that's essentially what I do, is like, I build in and build out most of the time when I do high time frame stuff. And then sometimes you just get like lucky because you're seeing everything that everybody else is seeing, which is like here or higher. When we were back at like 31.2, and we collapsed back within the range. It's like freaking duh, right? Initial failure where you could have shorted. I didn't. I was too skeptical. Failed back within the previous range. Easy short. Nuke off a cliff. And that's what I wait for. Like, that's my problem, is that I'm sometimes too conservative. Like, he's better at scalping than I am, like low time frame, being able to smash in and out. My problem is that sometimes I'm way too conservative, where I'll be like, no, I'll wait until it does perfectly exactly what I want it to do, and it does everything, on the oscillator where it's breaking down, on the 4 hour, or it's like the retail stablecoin demand. That's something, like I said, I use so much on top of everything else. But that's like frothing at the mouth, allocated into the market because everything's going up, and then I wait for shit to break down, and then until it starts gaining back, it just looks uninteresting for the most part. And then I just wait, or I trade alts. Or right now I'm like I said, I'm high frequency I'm doing Zao shit, like high frequency, just because. I mean, why not, right? But I think I'll end it there and just kind of like show you guys the general plan if I still have it. Yeah, this is still like the general plan that I'm looking at, right? We're still rejecting the level. We came back down to it. I think I showed this on Monday. Um, yeah, or maybe it was yesterday. I don't remember. Yeah, it was Monday. So yeah, price coming down below it, bearish retesting that level. So the short still valid from the loss of the level down to 28K until proven otherwise. Until you regain the level that you lost that led you to the low, which is where you're at now. So to gain back the level, you want to gain the high that you failed at. These are the range low that we previously had that's been bearishly tested. It must be gained to go higher. You still have a potential failure point at 31.2K if you regain the range low at 29.9 and all the way up to 31.5. Like you can go straight to 31.5 and then fail it and then fail the whole thing and then just start crashing down, which is still very possible. So that's the way my brain works when I look at the TA and the levels. Like I care about gain or loss at a high time frame. A lot of this stuff you can almost base it off of, you can almost grid it sometimes. Like you can almost grid square it and just plot like, every single $1,000 mark, but you miss so much. Right. That's the problem is that, and it's never perfect versus like you're doing the actual levels and the actual TA off of those levels, which if it's repeatable, which it is, then you have a pretty good system. So I still want to do that. I still want to do 28K, like so bad, so freaking bad. Hell, I want to go. I'll go to June right away. Like, because if we lose June, like we're probably going back here, which would be funny. So I guess the thing that matters here is like regaining the local and then popping back up to 29. But you're at the inflection point. You're essentially you're at this. Like if you're looking at it in this perspective of if I turn this stuff off, I put that on range. Like that is to about there. It's round about your range that you're looking at, the local range that you're in. Ish. So yeah, I care about gaining the midpoint back. Or if you run the low, freaking do it. But hopefully we'll get some volatility coming in tonight. That'd be fun. Yeah, but I think that's it. I'm gonna call it there and end it if that's all right. Yeah, it was nice. I mean, it's unfortunate again with the low volume of stuff, but you can always find things that are pretty interesting. Like Uni's nuking off a freaking cliff right now, which is I find absolutely hilarious. It's just going down. It's so deviating massively. If you get a regain of 5.75, you've got a giga bullish divergence on the 4 hour. But this thing should crash down and continue. Like it's already testing. Yeah, I mean it's all nuking. Like just look at the 4 hour. Like look at the 4 hour and where it failed. Like it's done. Alts are just getting absolutely aped on because, uh, well, yeah, I mean, DeFi is going down massively as well. DeFi is getting wrecked. The room was overbought for a very long time too. It just eventually broke. And only now, the problem is people are probably still trying to long this. And that's the way I look at it when you start bouncing after big moves like this. People trying to long it, and then you look for that secondary failure down until it regains something. Near's doing the hold on the level that you want to see. You just want to see something gain back. Lido is actually looking pretty ripe if it's going to do a bounce, if I'm going to be honest, just because of where it is. It just needs to gain something small. Like, it's just not doing it clean enough, even on like the 1 hour, but it's so close to just doing a bounce. and you've got liquidity to do it. So even down here, like the 15, it's still continuing down. It's just like you need to gain something to go higher, but that's the priority that messes people up. It's like the move broke down, the structure broke down. We're going down until proven otherwise. Like all of the alts just lost a lot of their major swing levels, but they're getting down to a massively bottom point that they haven't seen. Essentially they haven't been this bottom of the 4 hour since earlier this month, sure. But some of these things are probably going to go down to like these like doldrum levels of crab nastiness. Like you've already done, like even on Filecoin, you've done the major flush out, right? Priority still down, gain the daily, you go back up. It's the same thing on like most things. Sand, Shibu Pupu. Going which one? Yeah, but it's not super clean either. Like it's still potentially failing. Like it's broken some levels here. It's still failing at stuff that's important. Like it just ripped all the liquidity up to essentially 7.35, and it hasn't really gained anything back. Now you're looking for the gain back once it makes a higher low. Yeah, some of these smaller cap coins want to go. That's a nasty failure. They grabbed all the liquidity all the way up to the weekly open. But like I said, it's all these things. Like even algo here, like algos, if it closes the current hourly out above, it actually looks like it's bullshit divvying on the 1 hour, and it looks so like bottomed. Like we haven't seen that on like the 1 hour on this thing since this stuff. We had one big flush out and then we gained something back. But that's the whole thing. It can continue going down and do something like, that, and then it just went blah 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 blah, like off a cliff, and continue doing that until you actually get a gain back, and that's the biggest problem. Because the 4 hours is what matters. 4 hour and higher. This thing still has room to run to the downside with major levels. Like it can flush all the way down to like sub 10 cents. Rejecting. Ooh, wait a second. Yeah, like you might get a lower time frame bounce with some of these things. They don't look god awful on like some of the metrics. Just gain something back. Until you gain something back, it's like they'll deviate indefinitely and go down until you gain something back. Alrighty, well I'm gonna end it there. I gotta go downstairs and help the baby. So yes. So well, thank you. I appreciate it, guys. That was a good session. Went through a lot of stuff, and yeah, try to have at least one going in every week so we don't miss anything. But probably more if we can. Yeah. Oh yeah, I mean that's the thing too. It's like in general, people are really like meh in this. I mean, we expected that just because of the market conditions are so trash for most people, and most people are having a problem trading these levels. Like they're not fun. Don't get me wrong; it's not fun trading these areas for most of the time, but it'll pick up. Always does. Alrighty, you guys have a good one. I'm gonna bounce, so catch you guys normal time tomorrow. I'll be around. Also, like I always keep saying, is that